Hi folks, Derek Jones here, Director of EOS Property Group. Welcome to our this video, and this particular video is very much just going to solely focus on our latest Armchair Developer program, or project rather, which is located at 144 Renou Street in East Cannington. So this video, or this YouTube video, is very much about this project in particular. So if you're somebody who's just bumped into EOS Property Group and heard of the Armchair Developer concept, but you're not sure exactly the ins and outs of how it works, well, this video is not actually going to explain that to you. And what I recommend you do at some stage, either probably as soon as you finish this one actually, is to go onto YouTube and do a search for EOS Property Group, and then there's a video there that is the Armchair Developer introductory video. It's about 15 minutes long, but it talks a bit about the process of being an armchair developer and how the armchair development process works. As I say, this video is very much about the East Cannington project. So there might be a few gaps here. They would have been filled in by that introductory video. Anyway, enough of that. On with the explanation of the project. The site, as we've said, is in Renou Street in East Cannington in Perth. And that's probably located about 5 to 6 to 7 kilometres from Perth Central CBD. So it's relatively close, and it has a number of features for it that make it particularly attractive. First of all, the zoning is already in place. Okay, so when we put these plans up, we know that these plans will not be rejected because the zoning is wrong. We don't have to wait for up to 2 years to get zoning changed, so the planning process is well and truly already underway, and it should get through, barring any minor hiccups, without any great difficulty. It's actually 2 adjoining blocks, total just over 2,000 square metres. Power, water, telephone, sewerage, all of those services are already there, so the syndicate is not going to incur additional costs getting those services laid in. And finally, one of the beauties of this particular project is that both properties already have tenants in place, so whilst the planning process is underway, there will be rental income coming in, and that goes into the joint account, and each of the syndicate members will get a proportional share of that as well, and that'll happen at the end of the project. So there's 4 great assets or attributes that make this project particularly attractive. Now, it is one of the larger projects we've done. It's going to have 12 2-bedroom, 2-bathroom and a car space apartments, and running alongside them, which is a requirement of the City of Canning, 5 1-bedroom, 1-bathroom, 1-car base, 1x1x1s. So it's a total is 17 units. We've already had extensive discussion with the City of Canning. They have given us the concept, if you like, the imprimatur. They've seen the sketches and the outlines and the draftsman's drawings, so pretty much most of those boxes have been ticked already, so this project is well advanced. So let's have a look to see where Cannington is, particularly for those of you who may be living in the eastern states, who may be not familiar with the Perth metro area. So let's just grab this little cursor and bring it up here. So there's Perth Central there. That's the hub of Perth, if you like, the central business district, and all the facilities that go with that. Down here we've got the Belmont Racecourse, the Burswood Casino about here somewhere, and this is where the new football stadium's going, which will open in 2018. Over here is Subiaco. That's very much the cosmopolitan type area. Now, interestingly, if we drop across the river, the other couple of things too, you'll notice that transport access, there's this major road, Albany Highway, that ducks into Perth here, so access into the city is very, very good. There's probably half a dozen sets of lights thereabouts. But if you're more a train person, you'll see that there's a train line running there straight into the city as well. Now, interestingly enough, if somebody lives here, let's say it's a couple, one works north of the river, all they need to do is jump on this train, jump off at the Perth Metro station about here somewhere, do a swap over, and they can head north very, very easily. They can equally head east, and they can head west, or they can even come down to Mandurah as well. So, the capacity or the access to the bulk of the Perth metro area from here is very, very good indeed. The airport is over here, and obviously, as you would well understand, that's a major employer in any capital city. Here we've got a lot of those, what would you call it? Not warehouse type things, but big showrooms, and also small business, technical firms, those sorts of things. So there's a real employment hub in this particular part of the world. So that puts us in very easy access to that as well. Now along here in Vic Park, you've got a bit of a cafe strip developing, and it's growing quite nicely, to service the southeast part of Perth. So that's something else that we can look forward to as well. And over here we've got about here somewhere is Curtin University. So that is a major student institution. So it's highly likely, that Cannington or your unit could well be very, very attractive to students who come to Perth to study at Curtin Uni. So they're the sort of major features, if you like, that surround this particular area. So let's now, the other thing I would say is that a lot of this area here, and we're getting in on this too, has been densified as part of the City of Perth's densification process, and state governments over the last 10 years have thrown a lot of bucks into this particular neck of the woods. So it is very, very well serviced. You can see here by the parallel roads that it is a very old suburb. The blocks are large. You can see they're very rectangular. So we don't have to deal with an oblong shaped block, anything like that. Very much a flat type country, so we're not going to incur additional construction costs, leveling the site and bringing in dirt, that sort of stuff. So from that aspect, it's very, very well serviced indeed. Up here, probably about 800 metres away, we've got Cannington Central Station, and here about 400 metres away, so an easy walking distance is Beckenham Station. So that would then zip you through to Perth, or if you worked further southeast down towards Armidale, you can jump on the train running the other direction. Over here we've got Carousel, which for a long time was claimed to be one of the largest shopping centres in the Southern Hemisphere. Obviously that was some years ago, but it's a shopping centre that has been refreshed and refurbished over years, so it does maintain a good appearance even now. So over here you've got a leisure centre, Seven Oaks Senior College, which is very much a TAFE type thing, very much in the automotive trade. So there's another bundle of potential students as well. And then down along here you've got a lot of showroom type businesses as well, all the way along Albany Highway. So they too provide with plenty of employment opportunities for anybody who's living in the area. This here, Cannington, is about here. That's the dog races, and that's one of two dog tracks in WA, the other one being in Mandurah. Beckenham Primary School over here, and so on. So you can see it is very, very well laid out in terms of access to everything that you would possibly need. So let's just take a couple of street view images. This is a typical street in East Cannington. You can see a mix of the relatively new, slightly older, and then there's some very old stuff as well. And that's what we've laid our hands on. We've laid our hands on some very old rundown stuff at the right price, and then we're looking to build something like this. And the reason for this slide is to show you that there are other developments in this particular area that will make ours not be unusual, if you like. So this is the typical sort of development that's happening in the area. So not only are we getting in relatively early, but as those other developments come through, and as you appreciate, the cost of building goes up. So as they go up, it's also going to suck the value of our properties up as well over time. So it's a great place to be investing, and particularly when you consider that it's very much an entry-level opportunity. So here's another typical development that's happening in this particular neck of the woods as well. So you can see it's not out of the ordinary. What we're proposing is not out of the ordinary, and it's very much in keeping with where the suburb is going to go. Got a couple of artists' impressions of what the front facade may look like. And on this note, can I just say, don't so much focus on what it looks like, because that may actually, there might be some subtle and slight changes to this as we keep going with our discussions with the City of Canning. But very much look at the numbers, right? And we'll come through the numbers in a minute. So this is very much a decision that you're making as an investment. All right, so there may be some subtle changes to those sorts of the facades there. Similarly, there may be some subtle changes to the floor plan, but in essence, what you see is what you get. Now, this is the ground floor. You can see Renou Street is down the bottom of the slide here. Access is up this side, and then there's all your car bays at the back. So that's the ground floor. We won't spend a lot of time there because they are all taken. And similarly with the top floor, the first floor, a lot of these units are taken. The only two units at time of making this video that are still available are Unit 11 here, Apartment 11, which is a one-bedder, and Apartment 12. They're both 50 square metres, but you can see they've got a really large bedroom. They've got the kitchen, the bathroom and laundry in this neck of the woods. Then we've got a kitchen area, a bit of a lounge area, and also a study nook just here. So it is very, very well thought out, and that is ideal for students or people who are still studying. So they're the two units that are available, Unit 11 and Unit 12, and there's a bit of an opening over here, so it's light and breezy. So that's the concept. So who's going to bring all of this together? Who's going to manage the development on our behalf? We've identified a company in Perth, a company called Bird Property Group, that's been doing development management in Perth and also in the Northwest for a long, long time. And this is an area that they are highly skilled at. So if you're considering this as an investment, you don't need to think, well, what can I bring to the development table? To be perfectly blunt, all you need to bring is your initial deposit. The work will be done for you, and that's why we call it an Armchair Developer program. So Bird Property Group and Matt Bird and his partner Terry Peelbeam have been doing this stuff for a long time. Collectively, I think there's something in up near 40 years experience between the two of them. Everything from inner city Perth to the northwest to Fremantle to Northbridge. They've done developments in those parts of our great state. So there is expertise there that will be working for you. So that's the first question you need to consider. So the Bird Property Group will do the development management. So who's going to build? Well, we've been working with builders now for some time, and we've identified about 5 who very much focus and specialise on properties of this size, in that 10 to 20 unit range stuff. So when we've got our engineered drawings, we'll send those out to about 5 companies, and we've identified them because of their experience with developments this size, the stability that they've got a good track record and they've got good infrastructure and they've got good support mechanisms there. Their ability to be competitive on price, obviously that's a factor we do need to consider. And similarly, their capacity to deliver on time. So they're the 4 things that we'll really be looking at when we identify those companies. And then we put it out to a limited tender process. And then from the responses we get, we'll then choose a builder. There may be some backwards and forwards argy-bargy and trying to clarify a few things, but the specifications we've got are a good, solid investment type specification. So they're certainly not the cheap and nasty gear, far from it. They're really good, high quality, very reputable brands of gear that we'll be putting into these units. So what are these things going to rent for? Well, we came up with some numbers, but we then went to local real estate agents to say, well, what are these in fact going to rent for? And the independent stuff that we've got coming back, as you can see here, one bedder expected to rent in the 370, 400 range. Now we're using 385, which is the middle of that range in terms of all our number projections. The 2 bedders, 420 to 450, so we're using 435 for those. And we're also had advised to us that between $30 and $80 rental increase could be expected with a reasonable level of furnishing. So, that puts some numbers on the table for you to consider when you're looking at this as an investment opportunity. The next thing you need to think of is, well, what are these things worth? So, once again, we've gone through a process and we've identified what we thought they were worth, and that was part of our preliminary feasibility study. But then we've gone to one of Perth's reputable and licensed valuers and said, look, here are the plans. Can you do an off-the-plan valuation for us? And they've come back with the following numbers. They think that our 2-bedroom apartments, when finished, would be worth, today would be worth $390. So if we're selling them off the plan today, we could put a price on them at $390. If we're selling the one bedders off the plan, we could put a price of $320 on them. So you can see quite clearly that they are very attractive figures, particularly when in context of how you see the Perth market. And those of you who've been reading property reports will understand that the Perth market is doing quite well at the moment. So that's what the independent valuers have come up with, $390 and $320 respectively. So let's now have a look at what are the initial numbers. I'm just going to skim through the two bedders. 94 to get in, and that 94 needs to come from either cash resources you've got or from line of credit that's currently set up. We need to then borrow, the syndicate will borrow on your behalf another $230,000 odd for the construction loan, for your share of the construction loan, giving a total investment of about $324, $325. Now these things, as we saw on the previous slide, have been valued at $390, so that gives you an estimated capital gain today of $65 and a bit thousand. Rent return of $435, giving you a rent return of about 7% or a yield of 7%. That means your return on equity, in other words, you put 94 in, expected to get 65 back. That's a 70% return on what you initially put in over about an 18-month period. Okay, and your development's profit is about 20%. So we look at the cash flow situation for these. So you're making about $65,000, but this thing is also unfurnished, I might add, is expected to cost you, two better, about $14 per week. So what's that? One takeaway meal a week. That's nothing in the grand scheme of things. Right, throw a furnish pack in it and it actually changes quite significantly. We've also gone out to Depro, who are a reputable depreciation company, and said, hey, what do you think these things will depreciate at? And they've given us a 10-year estimation there, and when time comes, we'll go back to them and get a 40-year fully detailed report done for you. So you can see there they're looking at, estimated over the first 10 years of about $190,000 claimable in offset against your tax. So really attractive from that perspective as well. Now let's focus a little bit more on the one bedders, because they are the two units that are available. Remember, 11 and 12. Initial buy-in is about $77,000. So what does that give you? It gives you a proportional share of the block of land. So it's in effect, that's your chunk of land. So you've got security over that bit of land. It also provides your share of the stamp duty. It provides you with your share of the architect's fees, and it provides you with your share of development management fees. It pretty much covers everything. So between the $77,000 and the $189,000, there should be no more to pay other than maybe bank loan fees at the end. All right, and the depreciation report, which is $330. So between those two sums of money, that covers everything. All right, let's be clear about that. That is it. There is nothing more to pay. So the $77,000 gives you a share of the land. The $189,000 is your share of the construction loan. Your total investment is $266 on something worth $320. Right, your capital gain over the course of the construction period is expected to be at least in the vicinity of $54,000, and if the Perth market keeps going the way it is, that may even go up higher. At a $385 per week rent, you're looking at a yield of 7.5%, so it's really very much cash flow positive. Once again, your return on your equity is 70%, so you put 77 in, so you're going to get 54 back, plus of course your 77 as well, and your developer's profit is 20%. So there's some estimations for you. Did some cash flow for someone on $70,000 and with a loan interest rate of 6%. Unfurnished, it means that you're going to hold an asset valued at $320 in today's market for nothing. All right, once the ins and outs are gone through, it's not going to cost you a cent. If you put some furniture, if you put a furniture pack in it, then it's starting to look cash flow positive in the vicinity of $44 per week. So very attractive. All right. Now these numbers are very much estimations because things may well change over time, but that gives you a pretty good ballpark figure of how those numbers are framed up. So as I said, nothing to hold an asset worth $320 in Perth at the moment has got to be an attractive option. The one bedders, you're looking at a total depreciation estimated over about $150,000 over the first 10 or 11 years of its life. So, sorry, over its life. So it's very, very attractive from that perspective too. So let's now go back and re-look at what we've got. So this Armchair Developer project is obviously going to give you a well-located investment. So we've gone through all the East Cannington fundamentals, and you can see it ticks all of those boxes that an investor would look at. It means that you're going to take ownership of this particular unit or units at well below market value. So you're getting the property about 80% of its value. So it's a huge saving on buying, and we'll go through this in a minute. It's a huge saving on compared to buying it through a real estate agent. It gives, because you're paying much less for it, it means that your rent return as a factor of your investment is much, much higher. So therefore it improves or makes your cash flow situation very positive. And because you're looking at something that you've purchased under value and with a higher rent return, it means that you can accelerate your portfolio growth. So you're not having to wait for the value of the property to go well beyond what your current loan commitments are. So from all of those angles, an investment opportunity like this is very well worth your consideration, because it provides you with a number of options, and we've got a couple here. Look, it means you can buy and hold at no cost. You know, if you're a buy and holder, but you don't want your property portfolio sucking a lot of money out of the back pocket, something like this would be ideal. And it means then as the Perth market grows, you're going to get that capital growth. And as we said, you've already got 20% capital profits in there anyway. So, you know, you've leapfrogged a lot of other investors by involving yourself in an armchair program. Look, it may well be that you're thinking, oh, gee, that little, you know, $50,000, $60,000, whatever it happens to be, I might do a quick sell and then plough those funds back into my portfolio, wherever it suits you. Now, obviously, there would be tax implications for that, and that's something you would need to talk to your accountant about. But some of our clients are considering that as a strategy, not so much an ongoing strategy, because there are significant tax implications for that process, but very much about a one-off thing. So, but by and large, this process is set up about holding for the medium to long term, and because it's costing you nothing and you've got that accelerated profit, it is certainly well worth consideration. Now, a little earlier I said, look, you're going to save considerable amount of money getting involved in an Armchair Developer program versus buying through a local real estate agent. We've run these numbers here on the one betters, just so you understand what we're talking about. So if I'm an investor and I walk into the local real estate office or offer marketing company and I want to buy one of these one betters, we know it's valued at $320, so I'm going to have to borrow those funds. Most people do. We also know that we're going to incur about another 5%, which is $15,000 worth of fees, giving our total investment of $335,000. Most people would borrow all of that. Not everyone, but a lot of people would. A high percentage of property investors would borrow that $335,000. Okay, their rent return is $385 per week, giving them a rent return on funds invested at 5.9. They throw a furniture pack in, their rent return jumps up to 6.7. Now let's look at the same property being purchased as an armchair development. The property is still valued at $320 because it's identical, but this time we have no purchasing costs. Remember I said a few slides ago that total investment of $266 is everything? Well, that is true. That $266 cost covers absolutely everything. So there's no second stamp duty, there's no solicitor's fees or anything like that. It's all covered in that $266. So your total investment here is $266, which is a saving of about $54,000 if my maths is a little bit rubbery there. So $50,000 to $60,000 your total debt has been reduced. So that's a great thing for you. It means your rent return is $385, it's identical, but it means that your rent return now has jumped up by almost 2% on funds invested. So instead of being 5.9 over here, it's 7.5. If you throw a furniture pack in it, it jumps up to about 8.5%. So you can see that it's a significant improvement on your overall situation. And if we look at it from purely a cash flow situation, because you've reduced your borrowings by that $70,000, it means that you're actually saving in expenses, in interest alone, $90 per week or thereabouts. Now, much better for you to keep that $90 a week in your pocket than giving it to somebody else. All right, so there's a huge cash flow saving there for you. So if all of this sounds reasonably attractive, look, bang us an email, and next slide will give you our email addresses, and request the information memorandum. It's about 24 pages long, but it goes through the program in explicit detail. Right? If you like what you see, you'll need to give our broker, a guy called Brad Blaxall, who works at Crystal Finance, a ring, because all of our investors need to be endorsed by Brad, because we need to make sure there are no weak links in the chain, and Brad does that for us. Okay, so his contact details are 9455 3072, and with a 08 in front of it, just in case you're calling from the eastern states. Once Brad's given you the tick of approval, he will advise us. You can then select a unit and then complete and return your expression of interest. All right, that's on about page 23, 24 of the information memorandum. Now, it may well be you've still got a couple of questions, and that's great, because this is different. It's not like buying through a local real estate agent, and you should have questions. So either give myself or Chris Granary a call, and there are our mobile numbers, and that'll get you directly through to us. Or you can call the office, and that'll be directed. Then you'll be redirected to Chris, 1300 number there. Alternatively, you might be a bit of an email person. There's our email addresses, but can I just ask that you actually give us a call in preference? The reason being is the ins and outs of this sort of process are very much, it's easier to talk through rather than by doing it by email. But anyway, look, horses for courses and that sort of stuff. So please get in contact with us. Distill the information that you require, and then make a move. All right. Thanks, folks. Look forward to speaking to you.